Hey everyone, welcome back to the channel. I hope you're all doing well and enjoying the holiday season. Before we dive in, if you've been using the Kinetic Scalper or the Confluence engine, I'd love to hear your feedback in the comments. And if you haven't checked those out yet, the links are in the description below along with their dedicated tutorials. Trust me, they're worth exploring. Now, today I'm super excited to introduce you to something special. It's called the Quantum Momentum Fusion, or QMF for short. The full name is QMF Market Structure and Signal Suite by BullByte. And honestly, this indicator is a game changer for anyone who wants a complete trading setup all in one place. Think about it: market structure, multi-timeframe views, trend analysis, and confluence signals. Everything you need wrapped into one powerful tool. No more cluttering your charts with 10 different indicators. This does the heavy lifting for you. Alright, let's jump right in. First things first, head over to tradingview.com. In the indicator search bar, type QMF, Market Structure, and Signal Suite by BullByte. Click on it to add it to your chart. For this tutorial, I'm applying it to a 15-minute chart of Bitcoin against US dollar. Now, before we look at the signals and all the fancy features, let me explain the core concept. The QMF is what we call an oscillator. If you're newer to trading, don't worry, I'll break this down simply. An oscillator is a technical indicator that moves between defined boundaries. It shows you whether the market is experiencing strong buying pressure, strong selling pressure, or just neutral conditions. The QMF oscillator specifically moves between 0 and 100, with 50 being the neutral midpoint. Here's how to interpret it. When the oscillator reading is high, let's say above 70, it tells you the market has experienced significant upward momentum and may be approaching exhaustion. Think of it like a sprinter who's been running full speed. Eventually, they need to catch their breath. On the flip side, when the reading is low, below 30, it suggests the market has experienced significant downward momentum and could be due for a bounce. The area between these extremes, that 30 to 70 zone, represents normal market fluctuation where anything can happen. Now, when you apply the indicator, you'll notice several visual elements appear on your chart. You'll see energy candles, support and resistance levels, trend lines, and small symbols that show price action features. These symbols indicate things like trendline breaks, dynamic support or resistance breaks, and whether key levels were respected or violated. This is crucial information that every trader should know before entering any position. Let's talk about the primary feature, which is the energy candles. You can also switch the display to line mode, Heikin-Ashi, or impulse bars depending on your preference. But for now, let's focus on how these QMF energy candles work. Green candles indicate the oscillator closed higher than it opened. This represents bullish momentum. Red candles indicate the oscillator closed lower than it opened, representing bearish momentum. Pay attention to the body size of these candles. Larger bodies indicate stronger momentum conviction. Small bodies suggest indecision or weakening momentum. Let me show you a real example from today's market. It's December 24th as I'm recording this. Let me zoom in on the chart. Here you can clearly see that Bitcoin is moving in a downward trend. Now look at the oscillator. It's telling us something important. Despite there being obvious bearishness in the price, there's actually no clear trading opportunity right now. Why? Because the volatility is too high. Watch this. The price came into the extreme zone and bounced back. Check the indicator reading. It's close to 22. Then, price broke the dynamic support level, but it took support from the trend line and reversed. Without this indicator, you might have jumped into a short trade right at that bounce. Now, let me quickly explain what each visual element represents so you know what you're looking at. These triangular symbols indicate trendline breaks. These horizontal lines represent dynamic support and resistance. You'll also see EMA lines and their crossovers marked. When you see the label H-bear, that stands for hidden bearish divergence. These elements work together to give you a complete picture. Let's continue with our example. Now watch what's happening. There's a bearish candle on the oscillator that breaks through key levels. And boom, look at the price chart. A big fat candle breaks through resistance. But here's the real insight. Notice how the candle size on the oscillator starts increasing as volume increases. Then it takes a pause at the trend line. Price reacted and reversed from this trend line. Then we got a resistance break, followed by a trendline break, all while hitting exhaustion levels. Check the indicator carefully. The reading reached 95. That's extremely high. It clearly shows the market is under heavy reversal pressure. See how the price has jumped out of the cloud zone? That's signaling it might be time to take profits or reduce exposure. Now here's where it gets interesting. A red candle forms on the price chart. It looks big and scary, but look at the oscillator. It prints as a small candle. This tells us it's not a reversal confirmation. And right after, you see a green candle forming. Look at this price action. It pulled back, took support from the trend line, and bounced right back up. Most traders would have panicked thinking it's reversing and jumped into a short trade. But the QMF clearly showed it was just a pullback. See how the candle has now come under the cloud? This is valuable context you simply can't get from price alone. So I hope you're starting to understand what's actually happening beneath the surface versus what the candlesticks are showing us. Let's move forward and see what happens next. Now that the exhaustion manipulation is complete, the price is ready for a genuine move downward. And look at this. You get a short signal from the indicator. This is labeled as a B-grade signal, which means we're at about 65% confidence level. Let me quickly explain the signal grading system. There are three types of signals the QMF generates. A grade signals have 70% or higher confidence. This means strong momentum factors are aligned and the probability of success is highest. B-grade signals have 50 to 69% confidence. Moderate momentum factors are present, and these trades can work well with proper confirmation. C-grade signals have 30 to 49% confidence. Some momentum factors are present, but the picture is incomplete. These require extra caution. You'll find more detailed information about the signal grading in the indicator's guide documentation. Now let's see how this short signal plays out. Price came out of the exhaustion zone and we waited for further price action. Then look here. We got a trend line break which increased our confirmation for the short trade. You can see price started making lower lows, although it did respect the bigger trend line structure. This running trade made over 900 points. That's a significant move. But here's my honest advice. Always put price action first, signals second. The indicator is a powerful tool, but understanding what you're seeing should always be your priority. No indicator replaces skill and judgment. Now, let me quickly walk you through the dashboard. I've added notes within the indicator on how to read it, but here's a quick overview. The first section shows your last signal and how many bars ago it appeared. Below that, you'll see the current QMF reading. Then there's information about support and resistance breaks, divergences, and when they last occurred. The volume section is pretty self-explanatory. At the bottom, you have the multi-timeframe view. This shows the market condition across 5-minute, 15-minute, 1-hour, and 4-hour timeframes. The last column indicates how many of these timeframes are aligned together. When you see higher alignment, your trade has a stronger foundation. Before we wrap up, let me quickly show you some of the last few signals the indicator generated and how they performed. As you can see, most signals serve their purpose well. But remember what I always say, don't trade blindly. Use these signals as confirmation, not as your sole decision-making factor. Alright everyone, that wraps up today's tutorial on the quantum momentum fusion indicator. I really hope this was helpful and gave you a clear understanding of how to use this powerful tool in your trading. If you found value in this video, please smash that like button. It really helps the channel grow. Subscribe if you haven't already, and hit the notification bell so you don't miss future tutorials. Drop a comment below letting me know what indicator or trading concept you'd like me to cover next. I read every single comment and your feedback shapes these videos. Until next time, trade safe, manage your risk, and I'll see you in the next one. Take care everyone.